So bid and ask are two very important prices. When you look at a price action chart, you normally will only see one price. For example, if we look at TradingView, we're always going to just see one price along the right side of the chart. You'll see price moving up and down. You will not see both. TradingView is one of many platforms that finds the middle between the bid and the ask and prices it right there for you when you're looking at the chart. But when you go to place the trade, let's say you're trading through TradingView, this is their terminal, you'll see there's two different prices. There's the bid, which is the price that buyers are willing to pay, and then there's the ask, which is the price that the sellers are willing to pay. So if you remember from the crash course, how to count pips, look at the price here to buy it. It's 1.0871 versus the price to sell it is 1.08698. So what we do is we subtract the 71 from the 69.8 because the 1.08 is the same in both prices. So we subtract 71 minus 69.8, spread is 1.2 pips. That's how you read it. That spread is where the broker makes their commission. That is what you're paying to the broker. Now, if you're trading on TradingView, you see it right there as well, between the buy and the ask. And this little screenshot here is taken from the terminal that you can pop open on TradingView. So when you're looking at your bid and ask, you just want to make sure you understand that it's easily identifiable if you just can find the difference between the spread is easily identifiable if you can just find the difference between the bid and the ask. Spread is important because if spread goes to 5, 6, 7 pips, whether it's because of news or whatever it is, sometimes the brokers will just have bigger spreads. That bigger spread will chop into the trade that you're potentially taking. So just keep in mind, if I'm looking to buy it here at 0.0871, this 1.2 spread is basically how much I'm going to start negative on that trade. If I have a bigger lot size, naturally my commission, my spread is going to be a little bit bigger. The spread, again, is also going to show you, if you were to place the entry, where your entry actually will get taken. So the spread is that difference between the buying and the selling price. Now, there's 3 different types of orders that you can place, depending on if you're buying or selling, the bid or the ask. The first one, the one that you're going to know that I trade all of my trades with, is called a market order. I'm going to either buy market or sell market. And what that means is to get me in at the best possible price after I click that button, within seconds, microseconds, hopefully. The other types of orders that we have to understand are limit orders. These are like your take profit orders. So you have buy limits and sell limits. Buy limits is an order placed below price before price rises. So let's say price is right here. You could place a buy limit down here. Price drops, picks up your order, and then price goes higher, and then you end up making money. A sell limit is an order placed above the current price. So let's say you want to sell it here. You could place your order here, or let's say this is current price. You could place your order up here. Price moves higher, grabs your order. Hopefully it stops rising, comes back down. You make money. Those are the 2 different types of orders. Now, the 2 types of limit orders. The reason why I put right here that they're also like your take profit orders is because if you're buying it, you need a limit order above to take out that long position when it hits your take profit, and vice versa for the short positions. Now, stop losses are also an order type. They're a limit order type as well. So stop orders are triggered at a specific price when it's reached. If you're buying, the stop is going to be set lower than your entry price. If you're selling it going short, the stop loss is going to be above your entry price. And you also should understand that we have something that I don't use very often, so you don't need to use this in my opinion, but it's called a trailing stop loss. And that will move as the trade moves in your favor. The stop loss will continue to move up if you're buying it or down if you're selling it following price action movement. The trailing stop will stay a certain distance away from the current price, but if price starts to get closer to it, it stops moving. That way it takes you out of the trade still in profit. That's what a trailing stop does. But I don't really use those very often. So understand there's a couple of different order types, but basically it's your market orders that get me in long or short. I need my limit orders then for my take profit and my stop loss. And in my opinion, stop losses are a must. If you're trading without a stop loss, you're gambling. You're letting your ego try to come in. You're letting it in at that point, and you're letting it say, hey, I don't want to be wrong. I want to be right. And remember what I said from the crash course. It makes more sense if you're trying to build a trading business. If you're trying to gamble, go do whatever you want. But if you're trying to build a trading business, it makes a lot more sense to say, I want to know when I'm wrong so I stop losing money. And I don't care if I'm right, I just want to make money. Stop losses keep you on that edge. They say, hey, this is not working for you. It's time to get out. Let's look for another trade. Versus if you have no stop loss, that trade could wipe out half your account. It's not worth it. Stop losses are a must. So now you understand different chart types, you understand the most important news events in Forex, you understand the different order types, you understand bid, ask, spread, all that fun stuff. We've talked about margin and leverage and all that great stuff in the other crash course. Now we're going to talk about the most important technical indicators. I mentioned moving averages already. We're going to talk about them first. Then we're going to move into my favorite indicator that's going to make the entire world of difference in your trading. This indicator that we're going to talk about is the indicator that makes ASFX unique. It's what attracts people to us, and it's what keeps people trading the ASFX systems. So let's get into it.